All right, all right. I cannot reproduce that jingle. Secretwars, Stan Weinstein, stage analysis, weekly chart. Cannabis stocks, again. ogi.v. Organigram Holdings Inc. on the Toronto Stock Venture. And that is still like the other ones, guys. It's part of the healthcare sector, which we know is an uptrend, stage 2. Industry, pharmaceuticals, same thing. And that's the forest to trees approach from Stan. Index, sector, industry. Make sure those are going to drag you up. Make sure you're in, when you get in a break 2 straight, stage 2 breakout, that you're going to have stage 2 that's going to get the highest gains possible, 50, 80, whatever percent, instead of 5, 10, 15%. Even if you have the same formation, if you're in a hot sector, in the stage 2 sector, in the stage 2 industry, you'll be dragged and you'll get more successful trade. All right, let's start. They start looking alike pretty much, right, these? So let's check it out here. We have a breakout right back here on the monthly candle chart. We're trying to establish the trend, multi-time frame analysis. That's my top to bottom approach. And what do we have here? What was the target? And that target was reached a little while back. So this candle here, late December 2017. We had a confirmed breakout out of this sideways range. Target reached the next month. You would have entered right here at the close of the green candle. Sell stop right below the wick, protecting you within the pattern. And after that, the next month, you reach that target. Again, lots of volatility. Stuff is ironing itself out. Market's trying to figure out what to do with this. Supply, demand. Not a big fan. I like when it goes up slowly under the radar. It is what it is right now. And we're trying to find entries, guys. And look at that, another sideways move. Not a lot of sideways move, long ranges like you saw here. Small consolidations, bring yourself closer to the moving average. Yeah. And let's check it out. Next target. And what I'm trying to do here is establish trend, but look, I'm doing all these patterns, breakouts, what happened, some revisionist history, but what really counts, just look at the 12-month moving average. That's all you need to know. Inclining upwards, stage 2. Price action above it, stage 2. If you have a close below it, stage 3. You should not be in that stock anymore. You should take a breather, just in case it starts going downwards. When this, just before the 30-week average starts going downwards, if you keep having price action below it, so you just don't want to be there. Move out, it's not the end of the world. And if just wait for it to have a continuation breakout. And that's the cost. That's like your insurance policy. That little delta that you might not make because you got out and you just get in a little later when you have confirmation that it's a continuation breakout. Well, that's the price to pay your insurance just in case it goes down. And that target's reached from that pattern, another consolidation pattern. Right now, there's no target. All the targets that I see here from these patterns have been reached. We're starting to escape from that 12-month moving average. Would be pretty nice before we enter, and we're probably going to check it on the weekly. Maybe some sideways action, pull back, and let us get closer to the 30-week average, like happened here. And then after that, we could, here's my lines, and then maybe a breakout. So let's see if we get an entry on the weekly. And you can see here these other stocks, cannabis stocks that I've been doing podcasts on recently. Keeping an eye out on those. All right, here we are. Weekly. Look at that, the Mansfield relative strength. One of Stan's tenants. Make sure you're outperforming the index you're in, but I'm comparing it to the SPX. That's our baseline. NASDAQ and New York Stock Exchange stocks in there. And in that stage 2, back in the late 2017, outperforming. And after that, that sideways move here, that consolidation, those 5-6 months, 8 months consolidation. We're in a stage 3, even a slight stage 4 right here. Below the Ichimoku cloud, declining 30-week MA. But you never had that close below that monthly defined breakdown line. So all this avoided whipsaws because you see those 2 lines, those are the monthly defined breakdown lines. We would have not entered. It's good to have extra checks, not just I'm crossing over the 30-week moving average and that's my trigger to go ahead. It's like Stan called the wealth of evidence. I can't remember. Can't believe I can't remember that. But it's the 30, 40, 50 checks, whatever he'd be checking. Check, not check. And if you get a high percentage that were screaming the same direction, then it'd be a buy. And all right, so right now, here's the embryonic breakout right here. See that volume right there. Rarity, we're going to enter the first one. That volume is twice the average. We could even cheat a little bit to get rid of that. There you go. Oh, there you go. That volume, twice the average of the previous 4 or 5 weeks. Where's the candle? Get me a horizontal breakout line. Here it is. Oh, test. Oh, go through. It's these 2 candles here. That's a very, very nice stage 2, guys. I don't know who got in here, but if you got in at this candle, guys, that's pretty nice. You're above the Ichimoku cloud. You're outperforming the SPX. 30-week average is angling upwards. Now this is it. Here's the embryonic breakout here, which you don't want to get in right here. See this candle? Yeah, it's twice the average of the previous 4 weeks, but you're declining 30-week MA. You're under the Ichimoku cloud defined resistance. Remember, Stan says make sure there's no close overhead resistance. Well, we're using the Ichimoku cloud to define that. So embryonic breakout right here. You don't get in. Second breakout here. Here you get in. Off it goes. Very volatile. You could have even been triggered out here if you had a valid trend line. That closed below 30-week moving average. If you did the investor's way, it could maybe have been tolerated, but scary stuff. Like I said, get out and just get back in when you have another breakout move, which is it started here, man, giving some good signs. These candles here, not quite twice the average of the previous 4 weeks, but going crescendo. It's not always obvious, guys. Not always obvious. And it has to be obvious. It has to scream buy. Here it did. Here, it's a gamble. Now it's hindsight 2020. The price action went up, went down. And if it would have went up, I said, oh, here's the best place. No. This is what you want. Not almost twice the average. This is like a lot more. This really screams it. Horizontal breakout line. Mansfield above the 0 line. You were close to 0 or under going upwards. That stands triple confirmation. Combine that to the forced tree approach, the sector, the industry aligned with your direction with a monthly candle breakout, and you're set to go, guys. We might not have entered right here because we didn't have that monthly candle close. And we had it just a few candles later, and you could have waited just to make sure you're above. You have that close. What day is that? That is December. Oh, see, no, it did not close above that breakout line. So you would have had to wait a month, and we could have entered right here later on. If you want that monthly candle confirmation, just to make sure you avoid those whipsaws. Sideways move. And now here we are today, guys. Remove all drying tools. And that's what's fun about zooming in, doing multi-time frame analysis, is that you get to see turnarounds, or you get to see entry points a little more fine-tuned. Instead of just seeing that big wick on the monthly candle chart and saying, God, I can't enter here. My risk to reward is just unplayable. And when you zoom in, you get to see what's actually happening. This 1 month, 2 month pattern here, and that volume right here. Look at that. This candle here, right here. This candle right here above that. Close. 575, level. And you have the Mansfield outperforming the SPX, bouncing close off the zero. Very, very nice. See, I'm removing the volume candles, and then these explode. This is really twice the average of those previous 4 weeks. And the other candle after that, bang, keeps building up. So actually, last week, so the end of August, you could have started entering right here. At a stand, you know that on a monthly, you're in an uptrend, everything's aligned, and now this week it's advancing and it's just continuing. You're not too far off 30-week average. I guess you could enter there. Else, if you want to be really patient and you really believe in that 1 to 3 months pullback, and then you could probably have a pullback here and then go back up. And what you're going to want to look for is contracting volume. Those red candles, you want it going down. And you want that Mansfield indicator is probably going to go down. Also deflate with that price action going down. You won't be outperforming the SPX as fast. And then after that, you want to buy when the Mansfield is going up. You never want to buy when the Mansfield is going down. You just want to wait. Get that confirmation that the volume is decreasing on that pullback. And then you know it's healthy. So it validates this pattern. You get a better risk to reward entry because you're going to enter close to that breakout line, which is what I call a wall. Previous resistance, now it's become support, and then you bounce off that and continue stage 2. Win, 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 win. But the hardest part is just patience. And the 30-week average, you'll be bouncing off that at the same time. So that's it for OGI, guys. Last week was the best time. Now you're a little advanced. You want to get in just in case. Could probably take half a position and take the remainder half if ever it pulls back close to the breakout line. Or else if it never pulls back, then at least you have half a position and you could probably add on eventual continuation patterns if there are any. That's it, guys. OGI, man. Looking good. Ciao.